Hi guys, welcome back to the Daily Forex. Today we're going to be discussing about boom and crash. I'm going to teach you guys the full guide on how to trade boom and crash. Alright, so let's get started. First is the broker to trade boom and crash. You need a derivative account. Derivative is a broker that offers synthetic indices trading as well as other indices. You can only trade boom and crash on derivative. This is because derivative is a broker that offers it, and these two indices are volatile in their nature, right? Before we go further, we need to know that boom and crash indices comes in 6 forms, which are boom 300 index, boom 500 index, boom 1000 index, and crash 1000 index, crash 500 index, as well as crash 300 index. You see, these indices are available to trade 247. This means there's no closing time, unlike the forex markets. So the boom and crash indices rely on technical analysis and not the fundamentals. So there's no news you can read or events you can watch to trade this type of trading. So you need to be good in technical analysis to be able to trade boom and crash perfectly. In boom and crash trading, there are two types of trader, which is a scalper and the spy casher. You can be both if you are good in synthetic trading. So who is a scalper? A scalper is a person who takes advantages of small profit from price movement on each trade entries, while a spy casher is a person who predicts sudden drops or increases in price movements to make profit from it. So these two types of trading strategy has their own advantages and disadvantages. So let's talk about the advantages of a scalper, right? So advantage number one, a scalper makes quick profits and low risk trading, and also more winning than their losses. So a scalper makes quick profit from a trade by taking advantages of small price movements. So for example, we are on crash 500 index, right? So when a scalper enters a trade, it would place a buy when the market is buying after the spike to collect few candlesticks from the market, right? So what we're seeing right here is a paper illustration of crash 500 index, right? So right here, this is crash 500 index, and this is a bullish candlesticks, right? You can see this blue candlesticks that is going upwards is the bullish, and this one that is going downward is the bearish candle, right? So the red one is the spikes, which we are avoiding, which the scalper is avoiding. The red lines are the spikes, right? So the scalper would take an entry when he see that a spike has occurred. He would enter into the market and take few candlesticks from the market. After taking few candlesticks, he would exit to avoid another spike, right? So let's say the scalper has gotten 10 candlesticks from this trade on crash 500 index, right? So it would exit to prevent the spikes, because when the spikes comes, the spikes is going to cut off all its profits, and it may lead to losses on a trade, right? So it may lead to a bad trade. That's why you see a scalper only takes few candlesticks from the market, right? That's why it's defined as scalping, which is they are taking advantages of price movement to make profit on the market. Okay, so you see that when you place a buy, you're already making a profit because the market is buying, right? So you place a buy, so the market start buying. Then you take few candlesticks, immediately you exit the market to avoid the spikes so that you won't lose on the trade, right? So you can see a scalper make more profits than losses on the trade, because the scalps, they use technical analysis as well as indicators to trade. So we'll call this red line right here a sell on crash 500 index. It's called a sell on crash 500 index, and this blue line right here is a buy. Okay, it's a buy. So on the market trend, you can use the RSI indicator to level your trade, right? So you can call your trade at the top 90 or 70. You can call the one at the down 20 or 10. Then you can level it as sell and buy. Okay, as sell and buy. When the market gets to the higher high, you sell. When it gets to the lower low, you buy, right? So when the spikes occurs, you sell, right? So a buy on crash is bullish, and sell is called bearish. So when a scalper takes a buy when the market is bullish, is already making profit, right? So if you enter the market with the lowest lot size, which is about 0.2, it will be making approximately 0.10 cents from the market, because each candlestick right here is made up of 10 cents profit with a lot size of 0.2, right, from the trade. And if the scalper successfully collects 10 candlesticks, it will be making $1 from the market as profit. So what you do is times 0.10 cents times 10. Okay, so if the scalper successfully collected 10 candlesticks from the market, if you collect 10 candlesticks from the market, it will make $1 as profit from the market. It will make $1 as profit from the market, because one candlestick with a lot size of 0.2 will give him 0.10 cents, and if you times 0.10 times 10, that would be $1 as profit on the market. Okay, and the bigger the lot size, the more profit, but it will also increase the risk of loss on the trade. So when you use a lower lot size, you will make small profits but small risk, right, in case the market didn't go the way you planned it. But when you increase the lot size, the profit you will make from each candlesticks will be big. But if the market crashes against you, your losses will be big also on the market, right? So scalpers normally use small lot size on the market to make profit while taking advantages of price movement. So the second advantage, which is low risk trading, this is because a scalper takes small price movement from the market as profit. The risk of loss would be low, right? After a scalper has exited a trade after taking few candlesticks from the market, he or she would be avoiding incoming sudden spikes at the same time, right, which would have caused a loss on their trade. So a scalper would place a trade after a spike and will exit after few candlesticks, then would wait for another spike to come before placing another trade again to make profit. So you see how the risk of loss is low when scalping trade on boom and crash as a scalper. And the next advantage of a scalper is more winnings than losses. Scalpers make more profit than losses on a trade. This is because they enter a winning trade all the time. They make use of technical analysis and indicators to see a winning trade before they place their trades. So this is how scalpers make more winnings than losses on their boom and crash trading. So now let's talk about the disadvantages of both types of trading strategies. The scalper disadvantage would be when it did not analyze the trade properly before entry. It could lead to losses if a spike comes in immediately. That's why most traders use indicators to trade properly, while a spike casher disadvantages is more losses before winnings, and in some market conditions, the spike may not come at the appropriate time of expectation, which could lead to wrong trade ideas and loss on the trade. Well, you see, on Crash 500, you place your stop loss above the position where you sold, so that if the market continues to buy, your stop loss order can close your trade when it has reached the stop loss level to prevent more losses on the trade. So you see more losses before the profits when cashing the spikes, right? So let me explain this to you guys properly on the market chart and also in a paper illustration so that you can understand this perfectly. So this is Crash 500 index paper illustration, right, for spike cashers. So when on the Crash 500 index market, a spike casher will normally enter the market when price has gotten to the overbought level. When price has gotten to the overbought level, the spike casher will place a sell so that it will be able to cash a spike, right? Spikes normally comes at the overbought level. So when price goes to the overbought level, a spike will come down, right? So this is where spike cashers enter into the market to cash spikes. But in some market conditions, the spike may not come at the appropriate time of prediction. Okay, so when you predict that the market would spike, but it takes some times before the spikes will come in some market condition, right? So for example, you place a sell at this point and you thought that this point is the overbought level, right? You use your technical analysis, you already predicted, you took a sell at this point. Let me mark it so you can see what I'm talking about. You place a sell at this point right here, let's call it S. Okay, you place a sell at this point and you are expecting the spike to happen at this point, right? But it takes few candle ticks before the price has occurred, right? So what will happen when you place a sell before a spike occurred at this point? You will be losing on the market already. Your account will be minus, right? Right here, you place a sell. This is a candle tick. If you are using a lot size of 0.2, a lot size of 0.2, it will be minus 10 cents for this candle. Then when it enters the second candle, it will be minus 20 cents. On the third candle, it will be minus 30 cents. Just like that, it will be counting minus on your account until the spikes happens. Okay, until the spikes happens. So most traders who are cashing the spikes use good indicators. Okay, these are good traders. They use indicators like the RSI, the MACD, the average true range, and the moving averages. They use these indicators to see when the market has gotten to the overbought level, or when the market has gotten to the higher high, higher low, lower high, and lower low. Okay, they use these indicators to predict the market as well, and some of the indicators are really good. Indicators like MACD are really good in cashing spikes on crash and boom. Okay, so you see what I'm talking about. That spike cashers loses before making profits on the market, and sometimes in some market conditions the spike may not occur at the appropriate time that you expect it to come. So this will delay, right, and it will make some traders to exit the market quickly, and the trade will turn into a bad trade. Okay, so you end up losing your trade because you thought that the spike won't come, just because the spike didn't come at the appropriate time that you have predicted it to come. Okay, so you see, you place a sale at this point, see where the spike occurs. So let me show you how this works on crash 500 index on the chart. Okay, this is crash 500 index, right? So let me put an indicator right here. Okay, so a spike casher would want to cash a spike, right? But what they will do is to wait when the market has gotten to the overbought level before placing a sell to cash the spikes, right? So if you want to cash the spikes, you place a sell to cash the spikes. Then when you place a sell, right? So after you place a sell, you set your stop loss above. You place a sell, right? Let's say for an instant now, you place a sell at this point right here. You place a sell and you are expecting the spike to happen at this point. So what you do is to place your stop loss above to avoid much losses on the market. When the spike did not get to the point which you have predicted it, your stop loss level would close your trade automatically to prevent much losses on the trade, right? So if you place a sell and the spike comes in immediately, you will be at a very big profit on the market. Okay, let's say you place a sell at this point and the spike happened at this point. You see the profit you have made right here is a very big profit. All right, so the better one for me is the scalper, but both are great, right? But I prefer scalping on boom and crash than trading the spikes. So you can be a scalper and both a spike casher at the same time, only if you know what you are doing on the market, right? So let's go to the chart and see a good strategy on how we can trade boom and crash indices to make profit on the market. All right, so let's get on with it. So let me show you guys a quick strategy on how you can make profit on crash and boom market. Okay, so let's begin with the crash 500 index market. So the first thing what you want to do is to input your indicators, right? You need to be also good on technical analysis for you to be able to trade the crash and boom market perfectly to make profits on the market. Okay, so you need to be good on technical analysis. How can you be good on technical analysis? It's by consistency on the market. Okay, you need to consistently practice on crash and boom markets, looking back at historical trends. This is how you can predict and master your technical analysis skills on crash and boom, right? So what we want to do is to go to the indicator section, right? A trader on crash and boom always use indicators, okay, to trade crash and boom, right? So you go to your indicator section right here, go to the indicators, click on main window, right? We're going to use the moving averages, right? Moving averages on period 200. The shift is 0, while the method is exponential right here, and you apply to close. Okay, apply to close. Then the style is on 2 pixel. The color is purple color, which you can see right here, the color purple. Then after that, you use the straight line pattern, which is this first one right here. Then you click on done. So this is the moving averages, which is this purple line, this purple line that is curving. Okay, so the moving averages is showing you the price movement, right? If the price is going up or downwards, right, it's showing you the trend. So what we're going to do is to enter into another indicator, which is the RSI. I like using the RSI to level my trades when I'm scalping on boom and crash. So I'm going to put on the RSI real quick. So I'm going to choose on indicator on main window and look for the RSI, which is the relative strength index. The RSI on period 14 while apply to close, right? Then the levels going to be on 10 and 90. If you want to get the accuracy on the RSI, the accuracy of the RSI, you use 10 and 90, but you can also use 80 and 20. You can use 70 and 30 as well for these two levels, for a buy and for a sell. This two level is mainly when the market has gotten to the higher high, which is the overbought, and when the market has gotten to the lower low, right, which is the oversold. It's also called the support and resistance level. It's called the resistance, the resistance and the support zone, right? So I'm going to choose the style on 2 pixel, while the color is going to be on black color right here, while the style line should be the one on the middle. Then you click on done. Okay, then the time frame is going to be on all time frames on default, while the style right here should be on 2 pixel and the color is going to be on blue, right? But you can use any color of your choice as long as you know what you are doing on the markets, right? Then use the straight line pattern, which is this one right here. Then you click on done. Okay, so this is the RSI, right? This is the RSI, and this is the two levels which we are using. We are using level 10 and level 90. So I'm going to choose on the MACD indicator. I'm going to choose on indicator window 1. I'm going to choose on the MACD right here. I'm going to choose on the MACD indicator. Then the fast EMA, I'm going to put it on 12, while the slow EMA is going to be on 26. The MACD SMA should be on 9, right? But you can, choose any parameters to practice so that you can know which one works best for you. Okay, then you apply to close right here. Then you don't add any levels. We only added the levels on the RSI. Why? The time frame is going to be on all on default. Then the main should be on color black, while on 2 pixel. Then the style is going to be on red on 2 pixel as well. Then the line pattern is going to be the one with the straight one. Then after that you click on done, right? So these are the setup for scalping, right? You can use other indicators to scalp. You can use just technical analysis as well, but you cannot use fundamental analysis because we are not using news or events. This is just technical analysis alone. You can use just technical analysis to trade and indicators, right? So when I'm going to choose on my pointer right here, this is my pointer. Okay, so this level right here is 90. This level right here is 10. Okay, level 10 and level 90. So when price gets to this level, the market is going to sell, which is going to spike. Take a look at this spike right here, the red candle here. When price gets to the overbought, it will spike, and when it gets to the oversold level, it will buy. When it gets to the oversold, it's going to buy. When it gets to the overbought, it's going to sell. Okay, I hope you understand what I'm saying to you guys. Okay, so this is how to scalp, right? So when you're scalping on crash 500 index using this indicator, you take candlesticks when the market has spiked. That's when you enter into the market. At this point, that's when you enter into the market. You can wait until the market has gotten to the oversold level before cashing the spikes. You can wait until when the market gets to the oversold level before you place a buy. Okay, so the oversold level is going to be within this region right here. So when price has got to this region, you place a buy. You can decide to take 5 candlesticks from the market. So I want to tell you guys that trading, you can be a day trader, you can be a night trader, you can be a swing trader. Okay, so if you are trading as a day trader, let's say you are scalping boom and crash, you are taking just 5 candlesticks from each trade entries, and you are using a lot of 0.2. So remember I said you're going to be making just 1 candlesticks. You're going to be making just 0.10 cents for 1 candlesticks, and if you take 5, that should be 0.50 candlesticks, and if you take 10, it's going to be $1 from the market, right? So for a day, let's say you successfully gotten 100 candle ticks from the market, right? So let's do the calculation, guys. you got 100 candlesticks from the market, because yeah, there's going to be ups and downs, right? There's going to be some losses, but you're going to count more of your winnings than your losses, right? So let's calculate, guys. 0.10 times 100, right? What you're making is $10 from the market if you are using the lowest lot size, which is 0.2, right? And for each trade entries, you are taking just 5 candlesticks. You're taking just 5 candlesticks. So if you make 200, if you get 200 candlesticks from the market, that will be $20 profit. So you see, the lower the lot size, the small profits. The higher the lot size, more profits, but higher risk. Okay, so what is the risk in this trade? The risk is that when you're taking a buy, you can't set a stop loss. Your stop loss is really the market is not going to respect your stop loss. If you take a buy on crash, it will only respect your stop loss when you take a sell. Okay, so stop loss will prevent much losses on the market. So when you place a buy, the market is going to be buying. You are going to be making profits. But if you place a stop loss, when the spikes comes, it's going to break through your stop loss and you end up losing some profit. So the profit you have made is going to break through, cutting all those profits you have made on the market. And if you're still in the market, you're going to cut more of your profits. So you're going to be counting more losses than your profits. So what you do is you don't need to hold too long on the market when you're scalping. What you do, just take 5 candlesticks or 10 candlesticks, then you exit the market. Then you wait after a spike. You analyze the trend. You use your technical analysis, the indicator which you are using to see price movement, the average true range, the RSI, the MACD, the average true range, right? There are also other indicators you can use as well, like the market facilitation index, the force index. You can use other indicators to see how this works, right? So this strategy which I've shown you guys is just for crash 500 index. Okay, so I believe after watching this video, you now understand how to trade crash and boom, right? So I'm going to show you guys how you can trade using technical analysis and indicators like this on boom market, but we want to be doing this on the boom 500 index. Okay, this is boom 500 index, and we're using the same setup that we use for the crash 500 index. Okay, by the same setup, right? So how do you scalp and catch spikes on boom 500 index? To catch your spikes on boom 500 index, let me put in the pointer right here. So to catch your spikes on boom 500 index is within this uptrend on the MACD. For me, I use the upper trend of the MACD on boom to catch my spikes. So I already know that when the MACD starts creating an uptrend during the first MACD, let me show you here again. You can see that this is the first MACD. Within the first MACD, there's already a spike, right? So when the lower MACD is about to end and start creating an uptrend on the MACD, that's when spikes start happening. Okay, that's when spikes start happening. Okay, and a spike also happens when the MACD has reached the level of 10. So when you reach the level of 10, you're going to see a spike. Take a look at this. This green candle here is a little spike. Right here again is another spike. It's another spike. So when price gets to the level 10, you take a buy. Okay, you take a buy. On boom, you take a buy to catch spikes. Then to scalp, you take a sell. To scalp, you take a sell. Okay, so how do you see a good entry for a sell? What you do is wait after the spike. Okay, you wait after the spike. When price has gotten to this level right here, the level of 90, you enter for a sell and you scalp. So but I like scalping mostly on crash. I like catching spikes on boom. Okay, this is how I trade, catching spikes and scalping as well. Okay, so guys, I believe after watching this video, you now understand how to trade crash, and boom. Right? There are different strategies to trade crash and boom. There are different indicators to trade crash and boom. Right? So I believe after watching the video, you now have a clear understanding on how to trade crash and boom index. Alright guys, so if you enjoyed watching this video and you really like this video and you find value in this video, do it to like and subscribe to the channel, the Daily Forex. I will see you guys on the next video. Peace.